So let's get on with the program. So let's have each of our panelists introduce himself or herself and talk a little bit about their background, what they invest in. Manali.
I'm Monali Jain. I'm a member of Space Angel Networks as well as Harvard Angels. I used to be part of Kiretsu. I used to focus on technology. I've shifted my focus now on the space technology startups, such as the companies that build the rockets or satellites or asteroid mining. It has been pretty interesting ride so far. Lot of interesting technologies. Even a lot of drone companies are transitioning over to space because you can really experiment with the automation out in the outer space than on Earth, I guess. My background, I used to work for PayPal, Interwoven Good Technology, and my most of the leadership training comes from GE. What else do you want me to say? Why I'm an angel investor? So basically, after working for 15 years, I think I just wanted the money to work for me than me working for the money, and I'm fortunate enough to make that transition. Have been pretty successful in the investments in last 4 years, and I hope to build a portfolio of 20, 25 companies in 10 years.
Hey, my name is Asim. I have been in technology in Silicon Valley for last about 20 years. I am with Kiritsu Angels as well as with the Band of Angels, and I'm also chairman of the software committee of Kiritsu Forum, which basically means that all the software companies are pre-screened by a committee which I head. Along the way, I have done 4 startups, 2 of which made me some money, and the other 2 kind of ate up that money. And so, I know how to make money and I know how to lose money. And believe me, you need to know both the sides before you can make more money. And as I always like to say to my friends, it's okay to lose money, but it's kind of stupid to lose money in a stupid way. So the only advice we can give you here today is that, at least don't lose the money in a stupid way. Do your due diligence. Make sure that the things which you are doing seem to be right. A lot of people are not even doing their due diligence nowadays because he always asks this question, by the way, and I'll tell you right now what I think. I do think there is a bubble in the market in terms of the startup valuations. I have not seen any company, I think, in last, I would say, maybe 8 months, which is asking for money and their valuation is less than 5 million pre-money. I mean, that's ridiculous. They don't have any customers. Maybe they have some kind of a broken product and they believe they are worth 5 million already. So I do believe there's a bubble, and I do tell my investor friends, it's okay to lose money, but not to lose money stupidly. Besides that, what else? Why does one become an angel investor? I mean, that's like kind of a very odd question because angel investors, a lot of them are not necessarily full-time angels. Like I have a real life also, right? This is the part of my life my wife doesn't like, by the way. I do only 3 or 4 investments a year. But in my case, I guess the primary reason is besides the fact that, once in a while one can make some money. I think in my case, the reason is I just love looking at how many companies are doing how many things in the valley. Between these panels and my work with Kiritsu, I see anywhere between 80 to 150 deals a month. And as I said, it's just amazing to see how much is going on.
My name's Ivy. I am a senior associate at NewGen Capital, which is an early stage micro VC firm. We focus on high tech investments, but that can mean anything from a 3D rocket ship or a 3D printed rocket ship company to a Tableau for unstructured data and virtually anything in between. And one of our primary value propositions is to help our portfolio companies navigate the Asian market, starting with mainland China and including Korea, Taiwan, Singapore, and so on. Why did I become a VC? Well, I became a VC because I wanted to invest but didn't have any money of my own. So I wanted to start off with other people's money. And one of the reasons that I just love this job so much is, I find it incredibly intellectually stimulating and intellectually glamorous to be able to flip from, one idea to another and to just be able to dive very deeply and help all these fantastic men and women solve all these crazy problems every day.
Hi, I'm Ephraim Lindenbaum, and I'm a recovering entrepreneur. So I've been in your seat before. I started a large media company here in Silicon Valley, grew that through the 90s, not to date myself, and exited the first dot-com boom, if some of you might remember that. And, when you exit here in Silicon Valley, you really have two choices. You either start another company or you become an investor. And we spun up Advanced Ventures in 1999. We're one of two remaining 99 vintage maiden funds out there. So we're either pretty good at what we do or we're just gluttons for punishment. We historically have invested across three core categories: information technology, communications, and sustainability. And that's evolved over the years here in Silicon Valley. Today, we invest across three core technology sectors. Again, information technology, but that's really big data, analytics, and AI. We invest in communications, I mentioned, which today is IoT and mobility. And in turn, we invest in other categories like ag tech and food tech as well, which touches CPG. Our core verticals are fintech, health tech, ag, and food. Those are what we invest in. We're traditionally what you'd consider an early stage investor. We're investing out of our third fund now. What we tend to look for in our companies is a finished product, either it's an MVP or a functional product. Number one issue is going to be customers, customers, customers. We do look for baseline revenue, if not more meaningful revenue. And we've sort of followed this model over the years, and we've been just really lucky. We've had about a 30% exit ratio over the last 15 years, which means we pick them fairly well. And in turn, most of that is from repeat entrepreneurs that we've worked with in Silicon Valley. So I'm going to pick one of these right here. So what's the major difference of the mindset of a venture capitalist and angel investor? The difference is I have a day job. My day job is being an investor. An angel is someone who's investing oftentimes out of their own pocket from their successes in the past and so on. So you've got to remember that in our position, we've got bosses to a degree as well. So, we're responsible. So oftentimes when startups come to us and they're wondering why, we just didn't jump all over it, they're not aware that we have a lot of other issues, and they often wonder why we didn't just clear our desks and start digging in on their deal. But we're trying to pile through that stack that has been stacking up since the beginning of the year to get to them. And our bosses expect us to deliver a meaningful level of what we call IRR, or investor return. And as part of that, what that means for us is we've got a whole set of challenges that we need to work within and then have to figure out how to fit you within as startups. So from our perspective, when you look at us as venture, I wish I could say I was just writing checks out of my own checkbook, but at the end of the day, our capital as well as our limited partners' capital has to be applied in a much more thoughtful way. So that's I think a good thing to always think about when you're pitching us, because it's not just like we're going to go, oh my God, before you walked up here, I didn't know what to do with my money. So that's like kind of a good framing point as part of it. And the last one is, do we invest in concept stage companies? Well, so that's a really weird question, because at the end of the day, yes, we do. It just depends whose concept it is. So if you've had 3 or 4 or 5 successful startups and a couple of billion-dollar exits, we're all in with your concept stage startup, right? If this is your first time out, probably going to be a little more challenging. So just keep that in mind when you bring us concept stage startups. Thank you. Thank you.
Sure. Hi, my name is Yuri Papadin. I am with the Angels Forum. Angels Forum is the angel investment group out of Mountain View. We're a group of about 30 individual investors. We typically invest in a lot of health tech, life science companies, also consumer and enterprise technologies. We typically invest post-seed before Series A. My background is in corporate development M&A. That's where I spent the last 12 years in the enterprise technology sector.
Great. Usually I try and mix up the panels, and I have half angels and half VCs. I think today the VCs are outnumbered. But
Okay. We'll survive.
yeah. Anyway, why don't we talk a little bit? I've kind of went into it a little bit, and Ivy went into it a little bit. What's really one of the major differences between the mindset of an angel investor versus a venture capitalist? And if you're an early stage entrepreneur, or maybe a mid-stage entrepreneur, which is more suited for that entrepreneur?
So I was at a conference earlier this week, and this question came up, and I think this is a really good question, especially for early stage entrepreneurs. First, can we get a show of hands? How many early stage entrepreneurs are out in the audience today? How many mid-stage entrepreneurs? Okay, how many late-stage entrepreneurs? Okay, they didn't make it today. So what we're basically
they're late.
Sorry?
They're late. So
They could. Well, they've got day jobs. But this whole issue of angel versus venture came up earlier this week. And I think the second part of that question is, what is a venture financeable startup? And I think that's probably one of the better questions out there, because at the end of the day, I think what we've found, especially in this market when there's a lot of great startups out there, not all startups are venture capable startups. And there's nothing wrong with that. People can build great companies without the need for venture capital. I think my friend who was on the panel with me earlier in the week from Redpoint said, we're possibly the most expensive money you're ever going to take. There's a lot cheaper money out there from all different sources beyond us. What you're really doing is you're buying into our Rolodex, our expertise, and our networks, right? And that's what comes along with venture. And then you've got to remember that we have a set of economics, as I mentioned, this is our day job, right? So we have to see specific economics that match that story, where angels don't, which means that we typically have to look at about a 10x return for each startup that we look at, right? And the rationale there is just conceptually, let's say there's a $100 million fund and we're going to fund 10 startups, right? And then when you take rule of thumb there, 80 or 90% are going to fail, right? So we're going to have 2 startups left. We've invested $100 million. Those 2 startups have to exit at a high enough level they can return the $100 million that we took from our investors and then deliver a return on that. Not only that, we're considered an alternative asset class, which means that unlike putting it in a mutual fund, we have to return significantly higher returns than any other asset class out there, right? So if you think about those 2 companies have got to deliver all the money we spent on the other companies, plus a massive return on top of that. So when you look at us and you say, okay, well, why doesn't this fit? It's because it doesn't have that fundamental profile. So, at the end of the day, an angel isn't constrained by those issues. They might personally be, but they're not answering to anybody. So that's a good differentiator. So I think the big question today is it really a venture capable startup, or should it take venture capital, or is it really an angel deal? And I'll let my angel colleagues speak to that.
Well, yeah, I think you put it rather well. In my mind, really, it comes down to one thing: an angel is investing his or her own money, and a VC is investing other people's money. So, contrary to popular belief, an angel actually might be a tougher customer in a way and ask more, or be more of a hassle to get money from.
I don't know about that. They can definitely be unique.
Depends.
All right. So I think as an angel, I do have, it's a great question. I get that all the time, who invest, angel group or a venture community, right? I think that I've seen different kind of angel groups. So at Kiretsu, it's a great place because collectively, the power of all the members together can actually get you $1 million to $14 million. I've seen a company raise that amount of money going across the globe. With that, you also get a lot of network as well as resources that you won't have access to. So your chances of success go up. With venture community, I think it's really about the performance of the portfolio managers, the venture management team. And at that time, I think it's harder to get into. So we actually have received companies with $250K to $1 million in revenues who came to raise money from the angels. So I would say that it completely depends on the size of group that you're going with. With Harvard Angels, I've actually invested in people, not necessarily in the company or the revenue or the customer. So that particular investment is a seed stage. It's really about one-on-one connections with very handful of people investing in a company. So if you look at the angel group, you can see a big variation across the globe. I'm also looking at some angel groups in India who are really going out of their way. They don't even have an infrastructure for a company to shut down or get acquired correctly, but they are pouring money in the startup community, believing in the growth for the future. So I think if you have a great company, go talk to angels, not a problem. If not, they would actually give you the network, access to the network.
Well, there's some perception that angels sometimes make emotional decisions because it's their own money. The joke is, how do you become a multimillionaire as an angel investor? Start off as a billionaire.
You first become multimillionaire, then
Well
become
said.
an angel.
So, Yuri, what do you think?
Sure.
You're an angel investor.
Sure. So what exactly is your question?
Well, do angel investors make emotional decisions sometimes? and
Sure,
they're maybe
sure,
less
I-
methodical than VCs.
Sure. So, I mean, angel investors, obviously, if they're a part of an angel investment group, they obviously listen to the expertise within that group. If they're making their own individual investors, then obviously they're relying on their own expertise. So, yeah. So, I mean, definitely the decisions for the angel investors can be quite emotional. They're managing their own portfolio versus a venture investor. But ideally, they're actually listening and doing their own due diligence or listening to somebody else.
So who's nicer or more approachable, a VC or an angel?
I actually want to add on to Yuri's comment and say that I don't know that it's fair to completely pile on to angel investors for being emotional. As you might have seen from the last 2 or 3 years of early stage startup investing, I think one of the biggest reasons why there was such a boom was that there was a lot of emotion and there was a lot of excitement that was powering a lot of these early stage venture capital investments, and there was no way that angels alone were responsible for that. And I'd like to think that my firm wasn't necessarily acting in an emotional way, but it's when things get this frothy and this exciting, it's really difficult to to take a step back. And there have been some firms that I think very smartly decided to take a step back and move out of seed altogether when all this happened. So it does happen on the other side of the table as well.
Yeah, I would just add, I mean, in terms of the emotional aspect, a venture firm obviously has a lot more resources, quantified resources to look at the market, look at the investments, look at the comparables, and make a decision, a more unbiased decision. An angel typically does not have those resources. So that's where the emotional aspect typically would come in.
What was your best investment ever, and what was your worst investment ever?
My best investment is the one I'm currently doing or the next one I'm going to do. My worst investment ever is that investment if it doesn't work out.
Good answer. Anyone else?
My best investment, I guess, there's this small company in India. Well, they're no longer very small. I was the very first investor. I gave them $25,000, and just about 6 months ago, they raised $20 million from Sequoia at a pre-money of $100 million. So once and if and when they go public or something, I guess I will make some money. My worst investment ever actually was a stock purchase. And I hate telling this story, but he always asks this question somehow. But a long story short, I pretty much bought some stock. It is called Dendron. You people might know it's a biotech stock, DNDN. I hate it, so I remember it, DNDN. Okay, go look it up. I bought it for 36 at like 12.55, and at 1:10, 10 minutes past 1, when the markets closed and they announced their earnings, it went from 36 to 12. And I had bought maybe $300,000 worth, so I lost $200,000 in 15 minutes.
That wasn't a solicitation for
That
investment.
that was my worst, easily.
Anyone can top that?
Well, so yeah, to be a little more serious here, our best investments are often with teams. We're very lucky to have a number of different teams that we're on our second, third, fourth investment with, and that really changes the trajectory. And not always have these investments been great successes or leaded to exits. But I can give you one example: a team that we started investing in the early 2000s. We were the first money in, brought the deal to Sequoia. Sequoia came in with us in the next round. We exited for a very meaningful amount. That team came back again. We did a solar startup that got crushed in the dot-com collapse. Went and did another storage startup that was sold, and we're now doing an incredible food tech company right now. And we went from basically like zero revenue to several million, and we'll go from a sub $5 million valuation to about $200 million in about 24 months. And at that point, these entrepreneurs have been so successful, they don't actually need our capital. They let us invest and put us on the board because we're theoretically adding value, or we've just been nice along the way. It's one of those two.
What are 3 things you look for in a startup before you would consider investing in that startup? Just 3.
I look for the market. I think that's the number one. If they have understood the market, what they're going after, because I've seen again and again that people come up with their own ideas and probably then they come up with a vision of a market that's out there. I think you need to follow where the demand is. So I definitely look for that. It's more than the market. I look for the entrepreneur's understanding of the market. Secondly, I look for their ability to motivate and build the team and the culture that actually can continue the innovations and execute. Because strategy is amazing, but unless you can execute on it and deliver on it, you can make mistakes, but if you don't execute, you already failed. So I'm really looking for a team that's going to execute and work well with each other. And I think the third thing that I'm looking for is the network. I think no company can be successful alone. Every company has to partner, compete, and cooperate with different companies over time. So somebody who can work in that ecosystem, not by themselves alone, is what I'm looking for.
Well, so very quickly, I know he said 3, but there's 5 things we look at in Kiritsu at least, and I have learned it from the masters, so they're kind of ingrained in me, right? Like me. Yes, like you. So number 1 is I want to know about you, right? Who are you? What is your team? What you guys have done? As they say, great companies can take a dummy idea and turn it into something, and bad teams can take a great idea and drive it into ground, right? So one thing is the team. The second is what is the problem you are trying to solve? What is the market size? How well do you know the market? How well do you know how to take it to the market? Things like that. The third is what is your product or platform or service, whatever it is you are offering to address that market, how patentable it is, what is the barrier to entry, do you have an unfair competitive advantage which will last forever and using which you can keep on making money. The fourth is what is your revenue model, how are you going to make money on this thing. A lot of ideas come to us where the guy is spending 90 cents of my money to make $1 of revenue. Guess what? We are not interested, right? If you can spend 20 cents of my money and make $1 of revenue, now we are talking. The fifth and the last thing is what is in it for me? I'm not doing this because I need the practice, right? I'm doing this because I want to make more money. So what is your exit policy? How are you going to get out of it? Is this something, by the way, a lot of times ideas come which are great ideas and great companies, but they are good lifestyle companies. I'm never going to get my money back. So I'm not interested in a dividend play. So these 5 things, again, internet is full of wisdom, but ultimately you can boil everything down to a list of 3, 4, or 5 things, I guess.
It's always so annoying to go after Asim because Rob asked for 3 and he gives you 5. So, and 2 of those were my ideas. So my one remaining idea is I look for founder coachability. So if you're going out to raise 1 million right now and you're oversubscribed and you have 3 million, things are great. But being in a startup, as we all know, is a roller coaster, and when things go badly, we want to see that this is a founder that will be able to take a step back and to ask for and be receptive to help. And so that's something that is very, very important to us.
So what we would look for is hopefully a solution or product that's a must-have versus a nice-to-have. Ideally, that the team is mature and hopefully has done this in the past. A strong board and strong advisory board as well.
So I'll echo what all of my colleagues have said here. So really for us, the number one thing is the entrepreneurs. We call it the Moses factor, right? That's what we're looking for in an entrepreneur. And if you know that backstory there, that's the guy that got everybody to walk into an ocean, right? So we want an entrepreneur that can motivate their teams. They can get people to do and perform better than anybody else. And that's a unique skill set. And we've hopefully over the years gotten to figured out a little bit of what that actually means. So that's number one. 2, my colleagues talked about market. Market is key, although what we're really looking for is what we call white space. The ability to slip in existing markets, which are quite large, but with open spaces, predominantly because, in the crowded markets that we see today, we're finding that this term of disruption is often just purely that, a term. And the ability to take it all the way to an exit, in our case, if there's no exit, we lose. We're really looking for something that's got enough white space that they're going to be able to get out and get into a lead position in a category before everybody else turns their attention to it. Because what that does is, as opposed to an entrepreneur telling us what they think the exit plan is going to be, because they frankly don't know, what we're looking for are ways that we can sort of, if you will, alliterate the next couple of steps in that startup's relationship. Basically saying, if you found a white space and you've got a lead, regardless of what other big player may ultimately come in there, you've already got a hill that you can protect. Then in turn, there's an opportunity for a buyout, there's an opportunity for a merger, and then ultimately if success leads to some kind of an IPO or public exit, well, that's great for everybody. But what we want them to do is capture enough space so that they've got breathing room, because the old adage is, if our friends down there in Oracle put 100 people on this, they will figure out exactly what you're doing in a couple of days. So you've really got to get out and get that white space.
Every time we put out a call for startups to pitch, either pitch to investor panel events, we always put in the event description, we like startups that have traction, a market-ready product, users, sales, and revenue. But we always have people that show up and say, I got an idea, it's not ready, or we don't have the users, but it's revolutionary, and somebody needs to hear about it. So, F, you already answered the question ahead of time. Do you invest in concept stage startups? Why or why not?
We do not. Again, we invest post-seed before Series A. There's just a lot of risk associated with the concept idea stage that at least our group is not ready to be investors in.
Yeah, so I framed it like, unless you've done 3 or 4 major public exits, have a couple $1 billion in the bank, we're probably not going to jump on your concept stage startup. We have a very patterned model. Like I said, this is a day job, just like everybody else. So we really frame what we're looking for in the startups, and that's probably as far away from concept as one could get.
Absolutely not for us. We have to, because we are investing other people's money, we have to make sure that we return a decent return, within like a reasonable amount of time. And for us, that's 10 years. And so if you can somehow prove that you will give me that money back at 10x in 10 years, then absolutely. Otherwise, no.
Well said.
So I think this is where the angels might have a little bit of an edge, right? Because it's their own money. And as we have already discussed, a lot of angel investments can be a bit emotional. I, now knowing all that I know, and with the experience of last 5 years, I would not invest in a concept stage company. But the best investment I was telling you guys, which I did 5 years ago, was actually a concept stage, right? I think the concept stage investment typically comes from friends and family, people who know you, trust you, like you, or want to invest in you, or whatever it is. So again, depending on whom you call an angel, typically a professional angel investor will not invest in a concept stage company because she or he has seen a lot of them fail. But of course, the companies do get funded, but typically they get funded either by very new angel investors who don't know better, or by your friends and family.
Friends, family, and fools.
Well, friends and family, let's just leave it there.
Agree with everything all of them said.
Cool. That's the first time she has said that.
Good.
By the way.
Silicon Valley is supposed to be about solving problems. It's touted to be as a place where problems are solved. And some cynics would say, well, you see a lot of investing in social media, apps, higher forms of entertainment. What about real problems? Air, water, food, health, education. In a world that's filled with problems, not, what's the latest photo sharing app. And some cynics would say investors are just out to make a fast buck, as opposed to really concerned about solving problems. Your thoughts?
So the world is full of problems. I think I agree with that. And I'm kind of working on 3 different issues at the same time, I guess. One is, how do you convert villages, which are kind of, with the old infrastructure, almost no sewage system, almost no water supply or electricity, into smart villages? And we're partnering with companies like Cisco's, Ericsson, Google of the world to come together to create a prototype, turn a particular location into a smart village, and then replicate that across the world to different countries. I think that's going to work. Many people are trying. Actually, Government of India is supporting smart cities approach, where you take a city and try to convert that. But guess what? They really don't have the same challenges that the villages do. And they don't have a place or a location or the land big enough to accommodate the entire population of the world. So we decided to go the village approach, which is, I think, a breakthrough and innovation. The second bigger problem that I'm working on is women empowerment, and there are quite a few initiatives in place for that. And that particular concept comes in with promoting women to be angel investors as well. Many people have tried it from many different approaches. A lot of people walked up to me and said, "Are you going to invest for charity because women want to feel good?" And the answer is no. I care about my returns. I have an MBA. I know my numbers very well. And I probably would make more return than most of the guys out there. And I've been mentoring and promoting accredited investors across the country. We have about 40 of them in the program called Pipeline Fellowship. These are all women who are accredited angel investors, and they would go out and invest irrespective of a man or woman-run company, as long as you can give us a good return. I guess I'll stay with that and then let other people solve other problems.
Anyone else?
Yeah, so we've had a category we've invested in for the last 16 years called sustainability. And, I think that's maybe where Rob was going in terms of things like energy, water, in our case, agriculture, food, et cetera. But at the end of the day, you've got to remember, we're only investing there if there is a investment to go with it, right? Sort of an altruism and greed factor. There are things called impact venture funds today, which actually have a double bottom line, they call it, a bottom line of profitability as well as some other metric that oftentimes our investors have applied, whether that's women's empowerment, whether that's feeding people, whether that's development, et cetera, et cetera. So, there are definitely categories that kind of fit that model. But at the end of the day, we can try and talk ourselves into just about believing that anything will have some beneficial results. I mean, I will say that the most beneficial result is if we make you very wealthy because we invest in you and you make a lot of money, and therefore we make some of that money and we all give money to charity, it's probably as effective as otherwise.
I really think Silicon Valley needs to stop patting itself on the back. I think without hopefully not sounding too much cynic, but 6 months ago I was discussing a potential employment opportunity with an organization called Ashoka.org. It's led by a guy called Bill Drayton. You may not have heard of him, but he's like the father of social entrepreneurship in America, right? I met at least 10 people there. He wanted me to become the COO of Ashoka. And I met just wonderful people who, for a salary ranging from $70,000 to maximum $140,000, they are really working on world problems. It's based in Washington, D.C., so I ended up not joining because my wife, I realized, would have killed me. But I realized that so many people are working for like half the money which a typical engineer would make here in the Valley, and they are working on much bigger problems, much more relevant problems, and they are being much more effective than Google's or Facebook's or other companies or even Apple's of the world, right? So let's face it, we work on technology. Working on technology gives us a lot of money because we are lucky we do what we do in this world. And then using that money and using the power of technology, some of us end up working on some nice things. People like Monali, they go out and start working with villages, and a lot of us try to do things our own way. But I really don't think, and I really think we should stop thinking of ourselves as this way, that we are exceptionally good at solving other people's problems or that we even want to do that. I don't think I have noticed that.
So I think the thing about making these investments in water or energy or food and ag is that unfortunately it's not just a problem on the investor side and on the entrepreneur side, it's a problem on the buyer side. And for the most part, a lot of the customers in this space just aren't willing to buy, or at least they're very suspicious of new solutions, and for good reason, because if you think about it, when you're operating a water plant and you're trying something new, some guy says, "Hey, I have this new product called Snapchat. You can send a secret picture to somebody and it disappears in 24 hours, and a couple steps of logic after, it will help you save a lot more on water. What do you think?" You can say, "Sure, I'll try it out," but then if the app crashes, your entire water system can go down and people can get sick. You can't just push out a software update. That said, lately I've been looking around back into the sustainability space because that's something that is a personal passion of mine. And I realized that, there actually have been a lot of really interesting technologies and interesting new models that have been developed in these really like seemingly vapid spaces like social media, like games that you can play on your iPhone. If you think about O-Power, for example, it's a way to gamify saving energy and to incentivize people to reduce their energy load. Same with another cool company called Drop Counter. And so, at the end of the day, even though a lot of these new innovations aren't happening directly in this space, there is a bit of a trickle down process. And I think a lot of these new ideas just need to happen and be implemented and proven a lot more quickly in a kind of safer space. And that's why you're seeing a lot of that in the social media kind of consumer space to begin with. So I'd like to believe that eventually, maybe 5 or even 10 years from now, we'll start seeing a lot of the cool technologies today trickle down to the other more impactful areas where they can make a bigger difference.
I have time for one last question for our panel. It's always my favorite question. So this year's almost halfway. It's more than halfway over. There's been a lot of stuff going on in the world, in the financial markets, social unrest, politics, geopolitical issues. So what's one prediction you can make that's going to happen by the end of the year, 2016, which is a crazy year in a crazy world? It could be about sports, politics, financial markets, Silicon Valley. So one prediction, it's on video. You can pass if you want.
All right. That's a good way of saying it's on video. So you can go back and check out, right? All right. So this is what I believe is happening. It's not just going to happen. It's basically, I think this year is a great year to cash in if you have invested in mobile, social, any of those technologies. I think it's an amazing time to reap the benefits. But as we move forward for the next set of startup companies, they may not be from the valley because I think they're going to be in the space which is the outer space, the technologies and the drones and the robotics. And that's not limited. Most of the engineering talent that's required for those technologies is not in Bay Area yet. And there are lots of barriers of entry from the cost perspective to the funding perspective because there are a lot of other people who are trying to replicate Silicon Valley. So given that, I think the new startup companies and the new venture communities may not be from the valley. That's kind of my prediction. They're more global, and they can run the show from the top of Kilimanjaro.
Good.
I'm going to skip this one, Rob.
Yeah, you have a good track record. Yeah, next.
I'll go for something a little bit more fun, less work-oriented. So the last Giants World Series were in 2010, 2012, 2014, and this is an even year. So Giants World Series champions.
All right.
So I predict we're going to meet a bunch of really good companies. We're going to invest in a few of them. Some of them are going to be really successful. And we're going to change the world in the next year.
Oh, come on.
Well said.
That's what we're going to do.
I think we're going to have higher quality startups
Wow.
by the end of the year.
Even
Cool. All right, well, let's hear it for our panel. All right, so now it's time for the main event. So we have startups that are going to pitch. It's not a contest. We're not going to pick first, second, third. No one's going to get a certificate. These are serious investors, and we have serious entrepreneurs that we think are great candidates to be funded. We've gone through 3.5 days of grueling, rigorous tryouts and rehearsals. So we've arrived at 7 that we think are pretty solid. They'll have 2 minutes, no slides, followed by 4 minutes of Q&A. FYI, since this is a public event and we like to stay in compliance, we're not going to have them state a dollar amount in their ask, but the investor panelists have the executive summaries of the entrepreneurs so they know what the deal is with regard to that. So first up, we have MobileCube and Ignacio. Let's hear it for MobileCube.
Hi everyone, my name is Ignacio Roda. I'm the co-founder and VP of products of MovingCube, a company that last year had $370,000 in revenue. And this year we are growing 300%. So we are going to hit $1 million this year. So let's talk about what MovingCube is. So I guess you all know that developing a mobile app is something difficult. You need to hire developers. You need to buy a lot of different devices to make all the testing. So some years ago, I had this idea to create some platform that would allow anyone to build mobile apps without programming. So that's how we created MovingCube. So it's something like Wix.com, but for creating native mobile apps for Android, iOS, and Windows Phone. So now we have 1 million registered users in our platform, okay, and we are adding 1,000 new users every day that want to create apps. Okay, all this growth has been done organically. We haven't invested on marketing, so all the people are coming because we have a great positioning. So our developers have built 100,000 apps until now, and those are making 200,000 downloads every day. I'm not sure if this is working. Okay.
Sounds great.
Yeah. Okay, so we have a really solid business model. Basically, we offer our platform for free. So people can create apps for free, unlimited. And then we put advertisement inside the apps that they build. And then we split the revenue with them. So people can create apps at home for free and make money. Then we have some premium services. So people can pay $10 a month so that they can optionally remove advertisement from the app, or they can use some extra services. Okay? And now we are exploring like selling data from the end user, because those apps are generating a lot of data. So we have a really good opportunity now to scale. So we'd like to invite you to join. Thank you.
How far are you in the funding process?
We started like 1 month and a half ago. Started looking for funding. We got funded in 2013 by a Spanish VC. That was like $1 million. Okay, and yeah, now we are looking for a bigger round.
There's an infamous study about app fatigue that was recently published by, I think, McKinsey, that basically said that nobody is downloading any apps anymore other than Uber and Snapchat. What do you have to say about that, and how might that affect your business?
Well, I can share with you some forecasts from Gartner that say that the number of downloads is going to still grow for the next 4 years at least. So yeah,
So what are the kind of apps that people have used your app to build?
well, it's really difficult to tell because they create a different spectrum of apps. But until now, we have some good examples, for example, of video game guides. Okay, for example, this week or last week, you know the game Pokemon Go. So they launched the game, and only in 1 week, 64 apps were developed in MovingCube, and they were like video game guides for Pokemon Go. And one of them is making like 30,000 downloads every day. One of the guides created with MovingCube.
So where's your user base predominantly located?
You mean the end user or the developers?
No. Your end users.
End users of the apps? Well, they are located...
Geographic breakdown.
Sorry?
The geographic breakdown.
Yeah. Okay, so they are... 60% of our traffic, of downloads, come from...
Not downloads. Your actual...
Our publishers. Okay, so yeah, US is now our first country. 18% of our publishers are from the US. Then 17% are from Spain. Then I think 15 from Mexico, and 17 from LATAM in general. And then we have users or publishers from 250 different countries. So we are quite global.
That's great. So it's super impressive what you've done, especially since it's out of the standard market areas. First thing I would say, and this came up the other day, is why aren't you raising capital in either LATAM, Spain, or somewhere like that versus coming to the Valley? That's one question. Second, 1 million users is fantastic. And I guess my question is, how do you change your trajectory from having 1 million users and making $300,000 to having 1 million users and making 10 or 20 times what you're making right now? So I guess what I would love to learn is less about kind of like what makes it cool, because I think you sold me on that. You got 1 million people that tell me you're cool. So now what I want you to kind of tell us, right, is how do you monetize this in a much more effective way than you're doing now? Because you got the 1 million people, you got the
Yeah,
prize.
well, of course, we have 1 million registered users, but not all of them finish the app. So only like 90,000 or 90,000 finish the app.
Okay, here now we're getting
Yeah,
somewhere.
I
so you
mean-
actually have 90,000.
Yeah, we have a
actual
demand
users.
above 1,000 people every day who wants to build an app.
Yeah, no.
Not all of
I
them
mean
build the app.
people that
Yeah.
actually completed the
actually,
operation.
developers who finished the app and published it are like 90,000.
That's still great.
Yeah,
I
I think-
would use
yeah.
that number because probably if you came to see us and we figured that out on it, it would probably end the meeting right there. So
Yeah.
I just kind of zero in on those 90,000 because that's a very respectable number.
Okay. There was a first question regarding why we are looking for funding here. Okay. So, well, the thing is that in 2013, when we rose money from a Spanish VC, we started realizing that we were getting more demand from the US. So at that time, we decided to establish here. So I came here 2 years ago because we wanted to be closer to our main stream of users. Okay, so we came here to learn from the users. And now we've realized that we could find investors in Europe, but we believe that the value that investors here can add to the company is much higher because we've seen investors that have companies in their portfolios that we can create synergies with them. So that's why we are looking here.
Are we done?
All right, next up we have Genghis and RainVent. Let's hear it for RainVent.
Hi, my name is Cengiz, and I'm the co-founder of Technoset. We develop IoT solutions for irrigation to solve one of the fundamental issues, which is water shortage. Technoset started RainVent project in 2010. We have received over $1.6 million in funds from government and European Union to develop the project. We now want to take the product to the next stage by integrating our soil moisture sensors with Bluetooth transceivers and creating a mobile app that will integrate weather data to the sensor data and thus being able to tell the user exactly when and how much to irrigate. Our main target customers are home users and farmers. And these two markets combined spend around $6 billion every year on irrigation. And they are also the biggest consumers of the water. They use up about 70% of our fresh water. We have had field trials in 5 countries and 12 sites for the past 6 years. And we have had great results, increasing yield by 30% while using 50% less water. Proper irrigation not only gives you these economic benefits, but also gives you environmental impact in reduction of carbon emission, soil salinity reduction, and better plant health and performance. We're looking for we believe that we can be successful because we have great field experience, and our low-cost design enables us to maximize profits and maximize sales at the same time. We're looking for an investor to help us manufacture and market these products. We would like to take this chance to invite you all to make money, at the same time save world's resources. Thank you.
How exactly does your irrigation technology work? Because at least home or residential irrigation is very, very different from ag irrigation, you know, of which there are many different kinds too. So how exactly does your solution work?
Yeah, we've been, as I said before, we've been in the field for 6 years, which gave us a lot of experience. The main IP is in the knowledge of how you should do this, and
Sure, but is this a sprinkler system? Is it drip irrigation? Is it flood irrigation? How
no,
exactly is it?
it's a soil moisture sensor-based irrigation decision support system. So it is a Bluetooth integrated soil moisture sensor that's very low cost, because it's our own design. We've designed it to be very cheap to manufacture and very simple to implement. Although most of the systems that are out there today sell for over $100 per sensor, we will be able to sell it for something like $29.99. No, this is with the equipment.
Yeah, 7.
Okay. So what we have, I'm sorry, where were we?
So, so is your only advantage a cost advantage? Because in last 1 year or maybe 1.5 years, I have heard 5 or 6 pitches almost exactly in the same space, right?
Right.
So what's the competitive landscape, and is your only advantage a cost advantage?
No, it's not. We've built a soil database, soil type database, and at the same time a plant database. We know the root structures and the plant requirements, and how much water and when they would need it, because we've tried over 12 different sites and at 12 different climates. We've from Poland to Serbia to southern Cyprus to Turkey, and we've tried with cotton to corn to you name it. I mean, we've tried cherries, apples, and we have a very advanced database that we know how much which plant needs. So that's our main advantage there. And we also know what happens out in the field. So a lot of companies develop these sensors and they say you can stick it in, it's IP67, whatever, it's dust resistant, water resistant, but they've never put it in the field and, you know, had a boar come into the field, right? We've had that. So we have that experience. Sorry.
Great technology. I think we all need it, especially in the phase that California is going through a drought. I think, I mean, it's a particular product. I would say this probably is a white space that he was talking about earlier. And I think you're targeting landscapes, golf courses, greenhouses. When I see this list, I see a completely diversified market that you're going after.
Okay.
What's your niche? Or out of the 12 sites, what are the common patterns, and how do you plan to? Because 5 countries again sounds like, you know, you've gone beyond local one area.
Yeah.
So how did you choose such a diverse population, or why can't you focus or come up with a niche strategy?
Well, most of these research areas are based on the decision is made based on the drought conditions, right? So Mediterranean, Southern Europe, the Arabian Peninsula, and those are the main target areas because they're in 30 years they will be drought areas. So FAO estimates that. So that's where we targeted our development in.
So we're very, very active investors in the category, and I would make a recommendation because I'm very impressed with what you've done and you've raised a lot of money. And I think you might be missing your actual value proposition here coming from a venture guy. You know, the sensors and the hardware that you're talking about, it's all really commoditized. And if they've seen 5, I've seen 50 companies doing exactly the same thing that you've done. And there's also some other areas like geospatial, drone imaging, and all kinds of other areas. The one piece of that puzzle that's really missing out there is a reference data set that all of those other groups can use. So if you've developed all of this data, you should really look a little bit inward and think about coming back to folks like us as a data company, because that's a lot more interesting to us in our world than as a hardware company. And it sounds like you've got 6 years of great data that a bunch of Google engineers here who are building a drone that can, let's say, do moisture sensing and everything else, could utilize to make their business better, and they're going to pay you in the process. So you could scale this very quickly by just sort of changing to where your core value is. So just think about that.
Okay. Thank you.
Oh, audience, I forgot to mention, we have a list of the presenters and their websites on our website, idea.ipo.com. It's in the comments section of the event description, pitch to investor panel. So you can refer to that, and you can also look up some of our presenters later on. Next up, we have Dana from Cyber. Let's hear it for Cyber.
Hi, my name is Dana Kalski. I am the founder and CPO of Cyber. I've just arrived to the Bay Area from Israel to open our headquarters here. Our vision is to empower enterprises to deal with security breaches by themselves. Today, enterprises are handling hundreds of security incidents, only the prioritized ones with limited manpower and limited skills. It's like, for example, when at home you have a problem with your cables and you have to make a phone call and to call for a technician to arrive. Imagine all of this would have been taken and imaginally automated by itself without even making a phone call to the cable guys. So that's the reason we have built Cyber. We have built an automated intelligent platform that will help enterprises deal with all the security breaches. So we have an expert team which is based on Israel with guys from the prestigious A200 unit, which developed great workflows and actions in order to help all those enterprises to respond on time. We actually are handling the incident and response team to cut their response time by half time instead of hours and days. We are running an MVP on 2 alpha sites in big banks in Israel. We are gathering more information in order to improve our product. And we are developing partnerships with the integrators in order to open beta sites also here. We're looking for investments in order to open our platform to be a marketplace, so other hackers could develop on our platform new workflows and new actions. And we think we're perfectly positioned in a way where we can help enterprises to save critical resources, time, and reputation.
So quick question. I wasn't clear on exactly the value proposition. So let's say an enterprise has different security solutions, a WAF, whatever the products may be. So are you supplementing that somehow?
We are above all of the security solution. We're targeting enterprises which have all those WAF, firewalls, IPSs, and so on. Sure. We still need all of those detective technologies, and we are above that. We are giving a response. All of these security solutions that are implemented today, they just detect and blocked. You still have to have a great team of incident and response. There are still viruses, there are still breaches. You heard about Target and Sony, and this big team is not efficient enough, and we can help by automating workflows. It's a professional platform with built-in workflows, so you can switch all of the manpower from those teams to do more powerful things.
Okay, I just thought that those types of services were usually outsourced. So typically an enterprise would not necessarily, every enterprise would have an incident response type of a team. It's kind of provided as a service, as a managed services.
Okay, it depends. So that's why we are first targeting enterprises. Yeah, of course, there are outsourcing. There are companies that are outsourcing that, but still, they don't want to pay so much for those manpower. So in a way, you make it more efficiently and more professional and more like a state machine. It's much more quicker, and simultaneously you can run several things. So it doesn't matter if it's outsourcing or inside. You just help those enterprises to save money.
So
it's a very simple ROI.
Have you gone to the 8200 accelerator yet and talked to them? 8200, like the unit 82.
Yeah.
Have you gone to the accelerator yet?
No.
So 8200 now has an accelerator. Guy Kontsevich runs it, and there's probably about I'd say at least 20 to 30 VCs in the valley that are also from 8200. So you have a distinct competitive advantage that you should be relying upon, which is there's an entire ecosystem built up around security companies spun out of 8200. So there's nothing we can do to help you. They're the best. So So Guy Kontsevich, he's the head of the accelerator.
Okay. I'll write that. Onita, are you writing?
Okay, I have a minute and I have a couple of questions. I think I'm looking at your business model. It sounds like you're providing kind of a case management system with the cloud subscription focusing on the banks. If I got that right, how many banks, how does your business model work? How many users are you looking at? And how much revenue can you get from each bank? And how does your trajectory look like, go-to-market strategy?
Okay. So several questions. First of all, our go-to-market plan is going to enterprises like banks and deploy our system over there. So we have a model of on-premise, which is basically $400K per year for each enterprise. And we have a cloud-based, for example, for outsourcing, a cloud-based model that is based on the usage. For example, in big banks, they are today handling only 300 of incidents per day. With us, they can handle much more, let's say 1,000 per day. So it approximately...
But why do the banks need more incidences? I think
they already have many. So we're just helping them to catch them on time and to reduce those incidents so they won't be published on the newspapers.
Okay.
Well, we are out of time.
Great, thank you.
All right, next up we have Tito and Salesforce. Let's hear it for Tito.
Hello, my name is Tito Bort. I am the founder of Salesforce and an international employment arbitrage expert. A couple of years ago, I realized that hiring entry-level salespeople in the Bay Area was really expensive, about $75K OTE for a person right out of college, and about $130,000 fully loaded cost. What we realized also was that companies were not willing to outsource those jobs due to cultural connection and effective communication. Those jobs are not being outsourced to places like India or Philippines or Bolivia or anywhere else. Companies are wanting to keep those in-house. Though looking around and looking at most of young people, we realized those people also wanted to travel. So as of today, we have $1.7 million in revenue, about $1 million in the bank in net profit, and here's what we're doing. We hire people right out of college, we put them on a plane, and we send them to Costa Rica, set up an office on the beach, and those people are committing to a 6-month workation. It's a program where we're going to teach them the art of sales, we're going to get them trained on their job, and after 6 months, we send them back to the US to work at the headquarters. We've been working with Citrix ShareFile, now we have 2 other clients lined up, ChatMeter and AppBuddy. And I'm looking for a strategic investor in helping us grow the company, get your 10x investment, and help us connect to your network. Thank you.
So are these people I'm sorry, I totally missed it. Maybe I'm getting old. So what happens? I'm your customer company. So what will happen now? What's the use case?
Yeah, the use case is your employee in the US costs you $130,000.
Okay.
I'm going to grab that employee right before you hire him. I'm going to make him an employee of my company.
And will I give you that reference that hired these 3 people, or would you make that decision?
Either way.
Okay, and then?
Send him to Costa Rica for 6 months. I set up an office. I set up all the infrastructure. I give him apartment space. I set up skydiving, scuba diving tours, so it's attractive for the employee.
Do we pay them salary or not?
I'll pay them a salary. I'll cut your cost in half. I'll charge you $60K a year, and I'll follow your exact same training and your exact same pitch and your exact same KPIs. So we'll perform at the same level for half the cost for your company.
But hold on, for record, are they US employees or are they overseas employees? Because if
They're US employees. They're US
then
citizens.
the Labor Department will have something to say about that.
Nope. We have all the legal, we've been doing this for Citrix Systems for 2.5 years. We've set up the legal structure. That's our competitive advantage. We know exactly how to do this.
So the only advantage is that for the first 6 months, the training time, instead of living in a high-cost location like US, they are spending in a cheaper location. That's essentially what you are doing.
Yes, cheaper and more fun and more exciting
Well,
for the
cheaper,
employees.
let's just say cheaper.
For the enterprise,
Because I
yes,
find
cheaper.
US to be a lot more fun.
I like
but
skydiving.
that's okay. Skydiving you can do right here in Lodi. I took my license
so
there.
here-
What was that
here's why the
emotional
skydiving
question
matters.
that someone asked earlier about angels? I don't know. It sounds like you guys are going on vacation down at that end of the table.
Yeah, on the weekends, here's why it's good that we send them skydiving, because now with Facebook, all those pictures are going in there. And guess what? All their friends are asking, where do you work?
So what's
I work
the-
at Citrix. How do I apply?
Yeah, what's the barrier to entry, by the way, to this? I mean, this is more of a concept rather than anything else.
Right. The barrier of entry is having the ability to both understand how to do SDR level sales pitching, bringing all the managers down to Costa Rica, and understanding the local economies, so that you can go to Costa Rica, speak Spanish, set up an office, set up a legal entity, and do all those things. So I was born and raised in Bolivia. I lived in 5 countries, and that's why I've been doing this.
How sensitive do you think this is to economic cycles? So say a recession happens after Donald Trump gets elected in November and Brexit happens.
No.
What happens to you?
Yeah, there's over 20 million people working inside sales in the U.S. Every Bay Area company would need to go bankrupt for us to not have any clients. Because if a recession's there, they're going to start firing people. Every company's wanting to lower their cost. The first thing they're going to do is think, how can I lower my cost? That's actually, if a recession comes, that's a gold for us. We're going to get more and more clients.
How many new employees actually have the flexibility to go to uproot themselves and go to Costa Rica?
So anybody can go. That's why we target the people right out of college, because they don't have a family, they don't have a car. They just took their luggage out of the dorm room and they're looking, where am I going to go next? Am I going to get a job in New York? Am I going to get a job in San Francisco? Or am I going to take a year off and travel the world? We say, how about you take 6 months, travel to Costa Rica, have a ton of fun, and jumpstart your career, so that when you get back, rather than having a 75K salary and having to get into a 2-bedroom apartment crowded with 5 people, you can get a promotion and actually live a somewhat more comfortable life, if that makes sense.
All right. So I think I get the idea how you're building the team and being there managing sales teams, sales operations for high-tech companies. So get that. What's your business model? You sound like an outsourcing company.
Yeah.
How do you work on commissions? Because sales is all about commissions.
Right, we have a dual model, right? We're replicating their sales methods and techniques. We're running under the same KPIs, so the ROI is going to be clear. We charge a set fee.
KPI changed by the industry. So how many industries are you going after?
How many?
So the sales process and the KPI change based on the industry.
Right, we adapt
What is-
ourselves to each model. So we're going to have a manager go to your location, train there for a month, learn your KPIs, integrate into your system. So if you're working within Salesforce, we're going to get in the same Salesforce instance. We're going to be running the same reports. Those employees that we're having in Costa Rica are essentially working right under your umbrella of employees. It's just legally separated in our hiring, so we can lower your costs.
Are these people inside sales people, or are these the people who can go in the field sales? And
It's inside sales, of course, because we're having to call and do demos and all that into the U.S. That's why we're hiring Americans.
All right, next up we have Will from More Health. Let's hear it for More Health.
Thank you, Rob. Hi, my name is Will Lewis, and I'm CFO and General Counsel at More Health. We raised $3 million from NEA last year, and we're currently projecting revenues of $10 million this year, increasing to about $90 million next year. We've served over 500 patients in the past 2 years, primarily from China. China's healthcare system suffers from several problems that are not familiar in the United States, particularly in our targeted areas: oncology, neurology, pediatrics, and cardiology. For example, the 5-year cancer survival rate in China is 31% versus 66% in the United States. Even in the US, chances are that everyone in this room will be misdiagnosed at some point in their life. Our patient-centric approach to serious illness care pairs your attending physician with one of our top US physician specialists who collaborate on a diagnosis and an optimum treatment plan for you. This service is delivered via our HIPAA-compliant, proprietary physician collaboration platform, and your privacy is secured by our constantly evolving security standards. We sell our services in 3 ways. First, we rely on our network of 60-plus Chinese hospitals to sell our services a la carte directly to Chinese patients. We have also recently signed a strategic partnership with Ping An, the largest insurance company in China, to sell our product on a subscription basis alongside their other insurance products. We are also selling our product as an employee benefit in the US, where we plan to have over 40 brokers under contract by the end of the year, and we have several other interesting sales channels in the US. Remember, establishing the correct diagnosis is the main driver to good healthcare outcomes. Thank you.
I'm trying to clarify here. So are you an insurance company? Are you a service provider? What's the role you play in diagnosis?
So we are not an insurance company. There's no requirement for us to be registered with the DOI in any of the 50 states. What we provide is we provide the platform and the technology as well as the expertise to connect patients and their physicians who need assistance in correctly diagnosing patients with top physicians in the US who can assist those physicians with those diagnoses.
It's a collaboration platform.
Correct.
Who's your
And-
board member from NEA?
Jiang Xiaodong.
Oh, okay, John. Is Blake your board observer?
Jiang Xiaodong.
Yeah, but is Blake your board observer on Mo's team, or which team are you on?
Well, Jiang Xiaodong is he's our board member,
Right.
and Bo Jiang, he assists Xiaodong.
So is it NEA China that invested, or NEA US?
No, it was the large fund they raised last year.
Okay, perfect.
So is the whole business model that you will get them to a network of doctors who can give a second opinion? Or
Correct. That is the business model. However, we also do have some very interesting developments as far as our technology goes. It's really hard to stand up here and tell you about our technology without showing it to you, but we include secure collaboration tools. We also have an FDA-approved DICOM image viewer. We're also developing a radiotherapy planning device, which is unavailable in China, and for which there's a huge need. The state of the art in interinstitutional collaboration in the US for medical institutions is the fax machine.
yeah, I get that, Will, but let's get one thing clear, right? What are you selling? Are you selling a state-of-the-art telemedicine platform, which would be option A? Option B is you are selling some kind of a network of doctors, kind of a marketplace for a second opinion, and clubbing them or kind of mapping them to the first doctor, right? That's like option B in my mind. So which one is it? Or is it both?
We're selling both of those things. We also we are also going to be selling prescription medication internationally through a pharmacy subsidiary.
Okay, well, he was saying like F was saying, I don't want to necessarily give unasked for advice, but I suggest that you should really focus on one business model which is more compelling than, trying to say, I'm doing everything for this marketplace.
I understand that.
Yeah, I mean, if you're tracking, looks like you're tracking 9 mil in rev this year, and NEA China sounds killer. I mean, it's a great deal. We don't invest. I mean, it sounds like the bulk of your business is in China, which is awesome. I mean, just keep doing whatever you're doing, and I can't add any value. Just cheers, man.
Thank you. I really, the mission that we're doing is incredibly important. The standards of care in China are often driven by operating and prescribing rather than improving healthcare outcomes for patients. For example, we had one patient who had had 6 stents put in, and he came to us asking if he should have another stent. It was reviewed by one of our physicians. The physician said you didn't need 1 stent to begin with. You needed a month of rest. We had another patient. Her physician advised her that she needed to have her uterus removed. Our physician reviewed the case and said, you needed 1 month of medication. It's unbelievable the amount of good that I think that we're able to do.
I think we have very little time. I want to get to your revenue numbers. You said you made $2 million. Is this a Chinese revenue, or is it in US? Where is this company going to grow?
Right, so about 2/3 of the revenue is in China. We do have an efficient international tax structure, and we're in the process of forming our subsidiary in China using a VIE structure.
So most of the revenue will stay with China.
Is it a woofie?
Correct.
Oh.
At this point.
Yeah.
Okay.
Thank you.
You graduated.
All right, next up we have Alex from Recognize. Let's hear it for Recognize.
Look, they could kill it in China. They've got NEA China on board. That's like a big.
Hi, my name is Alex Grandy, and I'm the co-founder and CEO of Recognize. We're making it super easy for companies to thank and reward their employees. Last year, we made $50,000 in revenue, and that's with an unfinished product, and we have no investment. This year, we're on track to triple that. We have $7,500 in monthly recurring revenue today, and additional from free trials with hot leads, we have an additional $280,000 in revenue that's been put in the last, potential revenue in the last 5 months. So how did we get here? HR professionals know that employee engagement, satisfaction, and retention are big problems. And HR professionals agree that employee recognition has an extremely positive effect on these concerns. And our wedge is that we're inside the products that employees love, such as Slack and Yammer. And they also love our rewards offering, because not only do we offer gift cards like Amazon and Visa, but also adventures and experiences like a day off or renting a Lamborghini. Employee recognition isn't new to companies. Around 90% of companies have some sort of recognition, and Recognize, the product, helps to automate the top types of recognition. So our major pain points right now is we get around 570 companies signing up with us each month to check out our product, and we don't have the sales staff to be able to follow up with all of those leads.
Connect with the other company.
Yeah.
Sorry?
Send them to Costa Rica.
Oh,
Or wherever they do skydiving.
I love Costa Rica, but maybe not. But yes, send them to Costa Rica, hackathon. Another thing we'd like to do is be integrated in more places. It's all about being where the companies work. So we are the #1 featured app in Yammer, which has been great for us. And so we've kind of followed the Microsoft line with SharePoint, Office 365, making it very easy for those companies. But we can integrate in more places, #1 in more places, and then also Hasbro wants to be our customer, but they don't feel like we can support the 5,500 employees because we don't have the support staff yet. So we're looking to you to be able to hire those people to do all that. Thank you very much.
Do you know how much the enterprises typically spend on employee for the recognition, and how much of that do you get in your fees? Or
I think I've
whatever
seen
your rough
stats
estimate is?
ranging from 1 to 3% of the revenue will go towards employee recognition for the larger companies. I didn't get to the whole question. You can please
Yeah.
reiterate?
So how much of the actual, money that's allocated towards employee recognition you are actually looking to get?
That's a really good question. They say it's a $1 billion market, but that's usually towards the rewards and things like that. I can tell you that a company that has around 5,000 employees can be looking to spend around $100,000 with us, or maybe a little bit more in the first year, and then a little bit less the next year because of the onboarding cost that we initially put towards the first year.
This 100,000 is the cost of software which will come to you. This is not the reward money.
Yes, this is not the rewards money. Yes.
So once a company buys your product, how much of the implementation time is needed to integrate it with Yammer or Slack or whatever?
So, it's easier when they're integrated. So for instance, we have a very unique feature it's a user sync feature. So if you're on Office 365 or Yammer, it's one click and we pull in all your users. That's one of the biggest pain points with HR is managing users in third-party systems. So we're trying to find easier ways to make it as easy as possible to get started. And a lot of it can be automated for things like Yammer and especially Slack. Slack is very easy.
So in this thing, you have given these numbers. Jira has 5 million users. Slack has 600,000 users. These are total users?
Those are total users. They may be a little bit outdated. Those are the last we had from a few months ago.
Have you looked into affiliate marketing or anything like that with some of the rewards that can be offered through your program?
I'm sorry, I couldn't hear the first part.
Have you looked into affiliate marketing or anything like that as an additional revenue stream? Is that something that you're doing?
Billiard marketing?
Affiliate marketing?
Affiliate marketing. Well, we have people coming to us, especially Microsoft resellers coming to us to resell our product. But other than being in app directories, we haven't done any kind of marketing. What do you mean by affiliate marketing?
That's your job to figure out.
You mentioned 517 companies are signing up every month. How is that growth looking like? Where were you last year, and where do you see yourself going next year? How many companies have already signed up?
Yes, we have, right now we have about 50 companies who have actually purchased. A lot of these companies are individual users from companies taking a look at it and then leaving.
So 517 is the leads.
It's the leads, yes.
Okay.
But we can get into it. Atlassian, there's no employee recognition in the Jira store. Last time I checked, So the more places that we can be, it's basically a system of success. I mean, the more places we can be in these app directories, the more leads we get inbound. And I will look up affiliate marketing.
And what's the revenue model? How much money per employee per month or something?
Our model by default, which is lower than our competitors, is $2 per user per month. And we have
Per
a
user means per employee in this case?
per employee, yes.
That's quite a bit of money for, let's say, a company the size of LinkedIn, 10,000
Yes.
employees.
If it's
$20,000 per month, $240,000 per year,
Yes.
just for a software which does employee recognition.
Definitely. So we give big discounts to those larger companies down to potentially 20 cents, 30 cents a user.
Okay.
So I have two comments here. First of all, you said 570 companies sign up for free trial, but then you have 50 right now active. So I think I need to see more accurate numbers in terms of what the churn rate is, what is your conversion rate from leads. And secondly, I think you need to use this to your advantage. 86% of the employees who use Recognize stay with the company. I didn't hear that throughout the whole presentation. It just got lost. I think that's a big advantage. It's qualitative, but it's huge. And you need to monetize that.
Yes, we've been polling and gained some great results from polling. Thank you.
Right. Last but not least, we have Archana from Shivark Virtual Academy.
Hi, my name is Archana. I'm the founder of Shivark Virtual Academy. We provide one-to-one live online math tutoring services to students grades 3 to 12. These are highly personalized, convenient to attend, and affordable classes that students can attend with an experienced instructor sitting from home or virtually anywhere. We've generated 100K of revenue in last 18 months of pilot launch in the city of Fremont with a 50% gross margin. The model is highly scalable, and I just want to share some of the nuances of how we started and what are the competitive advantage that we bring in this business. So tutoring need is universal. So long as students are there, tutoring is going to exist. And we've seen and experienced that one-on-one tutoring brings much more significant improvement in a student's skill versus a group class, which most tutoring centers lack to provide. And there is a pain and stress in the lives of parents and students with a given commute, parking, drive time to the centers. So in addition, finding a personal tutor is very expensive, and if you get one, it's challenging to find a good tutor who will come to your home. So we are able to mitigate all those things with this live tutoring. Students are highly satisfied, and retention is very good, 80% retention and referral. And we found a very niche space in the market where most online companies are focusing on high school or college, and we are entering early, where principals are asking that the students in the middle school or elementary schools need the typing skills. So we're catching them early and then working thereon. I'm happy to provide you all the further details. We are in the growth trajectory, very, very high growth trajectory, and we welcome you to join us. Thank you.
So first question, I think you have a supply and demand. I guess your market is here, grades 3 to 12. But where are the teachers coming from? How are they qualified? And how do you capture the feedback for them?
Very good question. So our tutors are, yes, students are in the US, and tutors are based in India. These are experienced math teachers with minimum of bachelor's or master's degree and experience in math teaching. So we didn't want to go for the college student route. And they have been doing online tutoring for 6 to 7 years with the US students independently or possibly some other online companies. And we have mentors, academic mentors here, who coach them on the curriculum standards, and in future we do have plans to put the accent trainings also as part of our process.
How do you make sure that they know the curriculum? I think the US-based and India-based training, the methods, everything is very different from each other. How do you align those? Or do you stick to only the analytical subjects?
So right now we are focusing only on math and Common Core curriculum. So there are textbook materials available on Common Core curriculum, and for any math is universal. Like we teach math teacher in China or any country, for that matter, the subject matter knowledge still remains. The way of solving a problem may be slightly different, and that's where the role of academic mentors from the US come in. Academic mentors are the teachers in the US, and public school teachers who spare their time coaching our tutors.
Can you talk a little bit about your competitive advantage? I mean, there are quite a few solutions out there that are tablet-based, that are PC-based, that are on-demand online tutoring for various grades. So,
yes,
can you address that, please?
So, from platform perspective, our platform we're using plugging in a third-party application, and we have developed our own application as a front end, and some of the more features of the back end to enhance the core whiteboard solution. So it works across all OS, all devices. From process perspective, we focus on giving same tutor access, which many companies like, if you see Chegg, which is a tutoring marketplace, or TutorVista, Tutor.com, you get access to any tutor. We focus on giving same tutor because we believe that gives a quality service, and that's really worked for us. And on top, we provide monthly progress reviews with parents, which is really, really picked up a lot, and that's resulted in high student retention. And in addition, as I mentioned before, we are picking up early. So we've seen that students who started with grade 3, grade 4, they're going to continue with us for 7 to 8 years if we give a good service, whereas other people are doing high school.
So in 2018, you are showing a revenue of $5 million, right? Yes. How many students would you need to do that $5 million revenue?
So I tell you, on an average, a student pays $2,000. So 100K revenue has come from 50 students. If you look at subscription also, like $200 a monthly subscription, an average student will learn for 10 months easily.
So how many students will you need for $5 million revenue?
So, we would need 500 students to get to $1 million revenue, 500 students. Right now we are at 50 for $1 million, we'll need 500, and then 2,500 for $5 million.
And how many teachers?
So average student-teacher ratio is 15 to 20.
I think this will become more of a lifestyle business. I mean, really, there's no technology component, there's no nothing. It's more of a how much you can sell, how much you can make kind of thing. I mean, of course, any lifestyle business can also become a big business, but there's no scalability built in, right?
No, there is a lot of scalability. It's a pure edtech technology component, because how are you going to teach the students without having a virtual technology? So we have developed an application to be able to connect the student with the teacher. It's not only the service that we're providing, but we have also developed an application. And we are enhancing the application further to get the referenceability where, the parent or the student, with a click of button, can pass on the referrals to all their contacts. So it's a highly scalable business, and we are adding blended learning to it. And we are working on putting together much more multimedia content, which is much more richer than Khan Academy provides. That's the work happening in parallel. We've yet not launched it. So it's not only the service, but technology as well.
Let's hear it for all our presenters. And let's hear it for our panel. And let's hear it for our audience who's stuck around. Yeah. And because you stuck around, and I know you stuck around because we're at the point of the event you've all been waiting for, which is the raffle. All right, the first prize is Roger Royce, one of our longtime partners at Royce Law Firm. He's actually speaking in a couple of weeks at NLS. All right, come on, let's get this going. And the winner is, Chrissy, do the honors.
I have Insys Corporation, a Teen Finet. Do we have a Teen Finet, Insys Corporation?
SIST. Going once, twice. He's going next.
Edmund Wong, Relational Compliance Group.
Yeah.
All right.
Right on, man.
All right. Next up, we have one of my favorite prizes. It's the Idea the IPO jacket. I wear it almost every day in the wintertime. It's a nice jacket. Winner is
We're rebelling.
We all want the jacket from you. It's a nice jacket.
We're good.
Gashtaseb Shahab Erickson.
Yeah.
Gashtaseb Shahab.
once, twice. He's gone. Next.
Alexis Garberis.
Come on down.
Yeah. Sure, you get a jacket.
This was from Aptology. One of our sponsors, Tap into the Mobile Economy. And winner is
Ariani Tom, Stanford Engineering.
going once, twice. Next.
Nalish Garia, Broadcom.
Yeah, there you go. I think you're coming in.
Alicia, you have some prizes. Do it one at a time. Come on up.
Ooh, gift cards. Do we hear? Ooh, gift cards.
Okay, I have a Pete's Coffee gift card to Treelock per TV from
Nice.
Healthetics.
Right on, man. I paid for this place. You got a
I have a
gift card.
second one
You should
for
rebel, man.
Chrissy Sutton from Truvantis. That's it.
It was unclear, but we're good.
Oh, you have one more?
What was the one-on-one thing with?
Okay, so now we're on to the good stuff. Free pass to all Idea the IPO events for August of 2016.
Ooh.
Yeah. Winner is
I have a Ivy Nguyen, New Gen Venture Partners. Did you win that?
well, Ivy comped at all my events anyway.
She really gets a free entry to
Ivy,
this
you
event.
comped at all my events anyway. So
Her jacket. Really?
give it to someone else.
Okay. Give me a jacket. I can do that.
Hurry up, hurry up.
I have Ignacio Rhoda.
There he is. All right, so here's the grand prize. It's $100 cash. It's real. I got it from Wells Fargo. Some people here don't like to use cash. Don't accept cash. If you win and you don't use cash, you can give it back. The winner is
Navin Rungta, co-founder Law Army.
So now it's time for speed pitching. So it's basically controlled chaos. So you guys want to talk to these guys on the panel. You talk to them for 2 minutes, we ring the bell, you move on, and we'll go through a few rounds of that. So come on down, and thanks to everybody else for coming.